Hello everyone, this is Przemysław Radomski, CFA, talking to you on November 7th. And in today's video, I'm going to talk about Friday's upswing in gold, silver, mining stocks and about one of the reasons that many people think that it moved the market. And perhaps it did, because you can never really tell what really impacted buyers and sellers. The only good answer as to why the market moved is that because someone bought and someone sold. And everything else is just speculation on why it might have happened. But basically, what probably moved the market is the news that there were far many more purchases of gold by the official sector recently. And, well, did this change the outlook that was previously bearish? Did it become bullish? What happened? Was the impact on the prices? Well, basically, nothing really changed because of this, and if anything, that we can use this as a bearish confirmation. Yes, you heard that right. The official purchases are essentially bearish, not by themselves, because, well, if someone buys, then, well, there's more buying pressure, the price could go up. However, as always, context matters. And what we know about the gold market and how the official sector's purchases and sales tend to impact the market, well, it's not that simple. You see, the official sector tends to be one of the worst investors. They buy high and they sell low. Do you remember Gordon Brown? You know, the guy that sold about half of UK's gold reserves over 20 years ago. Please take a look at the chart, and well, you will see that the timing was less than perfect. Again, that was a decision to sell really a lot of gold. So was that bearish because the official sector sales were so huge? No. Conversely, that was a bullish indication that the worst type of investors, the official sector, sold, massively so. And so if we now hear about a significant increase about the purchases of the official sector, it's actually the other way around. The sale was bearish, so the sale was bullish. So right now, the purchases could be viewed as bearish indication. Again, if the official sector is increasingly buying, it might indicate that the prices are high. And given the trend and given the analogy to 2013, well, they are likely to become average or low. And that's where the bottoms are formed. So if they're high and they're about to go lower, then, well, obviously a decline is either at hand or is already happening as you're watching this video. Of course, this is not a short-term indication. In the short run, the market rallied because people don't really care about those long-term analogies. They don't understand them, they don't know them. And it might take a day or a few for investors to realize what's really going on and what's not going on, what is actually irrelevant. So the rally that we saw on Friday could be extended to today, tomorrow, but I don't think that gold will rally much. And it seems that the reversal and the decline are at hand. Let's take a look at the charts, the current ones. First of all, the big picture. From the long-term point of view, literally nothing changed based on Friday's and last week's price increase. The situation in gold remains to be very similar to what happened in 2013. The analogy remains intact. Practically what we saw recently is not even visible on the chart. If we look at gold stocks, we see the same thing. Additionally, what we see is a prolonged verification of the breakdown below the rising long-term support line. This line was previously broken in early 2020, and at that time it was immediately invalidated, which triggered a rally. But nothing like that happened this time. Well, there was an attempt to invalidate the breakdown, but it was invalidated by itself. It itself was invalidated. So what we're seeing now is a prolonged verification of the breakdown. And because it's so prolonged, it increases the odds of a big decline taking place. And since the long-term pictures of gold and gold stocks didn't change and continue to support lower prices, that's exactly what we're likely to see over the following weeks and months. Simple as that. Looking at gold's short-term picture, we see that, Friday's rally also didn't change anything. Gold remains below its declining blue resistance line. It just touched its 50-day moving average, the blue line, the thin blue line. And, basically, the last time it happened in early October, then gold reversed. Also, let's take a look at what's happening in the RSI. It just moved above 50. Let's see what happened recently when gold also moved above 50. Okay, that was this situation. That was in late September, early October. What happened then? Well, a sharp rally that was actually that took place until gold moved to its 50-day moving average. We saw the same thing on Friday, and then gold continued to decline. Well, so the implication here is bearish. When else was this the case? In late July. What happened then? Well, it wasn't the final top, but it was relatively close to it. When else? That was the case also in June, right? What happened then? Well, gold topped. Interestingly, the final top form, gold reached its 50-day moving average, just like what it did on Friday. So was Friday's rally bullish? No, not really. Okay. Silver. Silver provided us with another sell indication by rallying strongly versus gold. Gold didn't move close to its October highs, but silver did. So silver outperformed on a very short-term basis, which is what we very often see in the final part of a given rally. So again, this is a bearish indication, not a bullish one. A daily rally doesn't have to be bullish. It might, but it doesn't have to. If silver outperforms gold visibly, and it happens on strong volume, and it's one of the strongest volume-wise strongest session volume-wise that we've seen so far this year, then it's a bearish indication. Mining stocks rallied significantly too, but only on day-to-day basis. When we take a look at what happened compared to the huge 2022 decline, basically Friday's upswing is barely noticeable, really. Yes, GDXJ broke above the upper border of a triangle and the breakout is not confirmed. And just as the previous breakdown below the triangle was invalidated, so could this breakout could also be invalidated. And it's quite likely to, based on what we saw in silver and based on what we saw in gold. And also, please note that the volume was huge. There were recently 2 cases when we saw volume that was this big. That was in March and that was in January. In both cases, these were local tops. And short-term declines followed. Based on the long-term picture, based on the long-term charts that we see in gold and HY index, it's likely to be more than just a short-term decline that we're about to see. Also, the RSI, it's currently at levels that's in the past marked local tops and major declines followed. So, again, was the recent rally bullish? I seriously doubt it. It might be the case that it takes another day or few before the decline really starts, but really, the rally itself wasn't bullish. It might have appeared exciting, and It certainly did, because I'm getting statistics. I have a tool for measuring sentiment and searches and interest in social media about gold, and it spiked. That was above 1,000%, more than 1,000% of the average interest in gold-related searches. So people get really excited, and this excitement is what accompanies tops. So the outlook has been bearish, and it remains bearish for the following weeks. Compared to what's likely to happen, and let's keep in mind that this is a medium-term development that we're seeing here, not a short-term or a medium-term one. Friday's rally was, just a blip on the radar screen. What is more likely to happen than the continuation of Friday's rally is the continuation of the huge yearly decline. So the outlook remains strongly bearish. So thank you for listening to my analysis of the precious metals market. Please remember that it's just my opinion, it's not investment advice, and if you haven't signed up to my premium service or even the free mailing list, please do so on sunshineprofits.com/YouTube. Thank you again. Have a wonderful week. Bye-bye.